Woke up today, thought I would make a little episode for you on currency and investment opportunities around the world. Took me a while to get to this. I'm getting a slow start. I had a Hot Pocket for breakfast, but it is Nomad Capitalist, where we talk, just you and I around the kitchen table, about the real world impact of being a nomad capitalist. And today, I want to talk to you about some charts that I came across that were sent over by my friends at Latinometrics, talking about currencies that are strengthening, including one that we've talked about, one that I've mentioned, stocks in this country. And we're going to go through, if you're holding US dollars, which currencies have strengthened versus the US dollar in the last 5 years, and which have gotten weaker. Right now, people are looking at strong dollar, keep your investments in the U.S. Obviously, what we talk about here at Nomad Capitalist, what we help our clients create, complex holistic plans for, what we talk about at Nomad Capitalist Live is, number one, you want to have your money in other currencies for diversification. Sometimes by doing that, you put the money in other countries. That could lead to residence permits, citizenships. It could lead to higher rates of return. It could lead to higher yields. It could allow you to invest in things that are up and coming. And what's interesting, I saw Temu, this big Chinese company that's trying to take on Amazon. They're looking at what's happening with the TikTok ban in the US, and they are going from, I believe it was 63% of their global ad spend in the US down to the 30s. It was a big drop. I may have the numbers a little bit off, but they are pulling out of the US market. Nomad Capitalist has done the same thing. We have focused, we love our American clients. We love our American guests. And we're continuing to serve them. But most of our growth is in other Western countries, Canada, UK, Germany, Netherlands, as well as a lot of folks in some of the countries that we're going to talk about today. And so people all around the world realize they need to go where they're treated best. Because of that, if you're going to, what's the next growth opportunity? Sure, some U.S. companies have exposure overseas, but as we'll talk about with one of the currencies that has taken a beating against the U.S. dollar, I've actually done very well investing in that market in about the last 4 or 5 years. So let's go through it. Here's the first headline. The Mexican peso hasn't been this strong since 2015. Now, if you go back to about a decade ago, 2014, the era of emerging market dominance slowed down, and you kind of entered this period of the dollar getting stronger. Obviously, COVID sent a lot of currencies that aren't the US dollar dramatically down. Many have recovered, but the Mexican peso in particular was swept up, and it devalued against the dollar since 2014. But it hasn't been as strong as it's been in almost a decade. So it was about 6.4 cents against the dollar back in 2015, got down to about 4.6 cents during the pandemic. That was a time when I talked about the opportunity to buy some of these currencies at a discount. I bought Georgian Lari, 3.4, earned about a 13% yield on that, and recently exited some of that position. That was a nice time because the currencies appreciated dramatically, earned a good yield all along the way. That's what you can do with some of these currencies if you're holding onto some cash. And by the way, Warren Buffett, Apple, a lot of people are holding onto cash these days. Anyway, Mexican peso got down to 4.7. It actually got even weaker than that. I think it was like 24.5 to the dollar. That's closer to 4 cents. Now it is, it's almost back to those 2015 levels. And so I've been talking about the opportunity to keep money in Mexican pesos. Now, we've also talked about, well, a lot of our clients have gotten residence permits in Mexico. Some people live in Mexico. Some people live there part-time. I have family now who lives in Mexico part-time. Mexican banks aren't necessarily where you want to put your money. And so if you want to, get Singapore dollars, you just open a bank account in Singapore, a couple $100,000, and you can generally get an account there. You can just keep it in cash if you want. Not sure I would do that in Mexico. And so it shows that you want different strategies for different countries, and it shows that you want true diversification. The play in Mexico, and I'm not giving investment advice because my needs are probably different than yours, but for me, it's been, I'm going to buy some Mexican stocks. I have a dividend portfolio as part of my overall financial picture. Mexican banks pay very high dividends, and the dividend tax rate for someone like myself is much more favorable, and Mexico's dividend tax rate is more favorable towards tax-neutral structures offshore than, let's say, European stocks, like French stocks, where they pay pretty high dividends on as well. But If you don't live in a country that they like the tax policy of, you're going to pay a higher tax withholding rate. So Mexico's more flexible there. So all things that you want to consider. But, rather than just holding Mexican pesos, there are some companies there that I think will do very well. There are conglomerates involved in things like mining and transportation that could be interesting as more, activity with the China tariffs, more stuff moves to Mexico. I think Mexico's a bright future. I've talked about that. It's not all going to happen overnight, but I think there's some opportunities to find companies that you like, maybe get paid a higher yield while you wait. Maybe it's more tax favorable depending on where you live, and own Mexican pesos. I think in the long run, the Mexican peso and the country will do well. Other countries and other currencies that have strengthened over the last 5 years, the Swiss franc has done incredibly well. Now yields on that are very low, although some Swiss insurers and reinsurers, for example, pay decent yields. Switzerland has one of the worst dividend tax rates in the world, again, depending on where you live. But if you opened up a bank account in Switzerland or Liechtenstein and you held Swiss francs 5 years ago as part of your cash pile, you are up one of the highest gaining currencies in the teens over the last 5 years. Now, this does not include currencies like the Georgian lari and the Armenian dram. So there's other very exotic currencies like that that have done well. I would expect that those have outperformed all these currencies. They just don't make these charts. And some of the highest yielding currencies of all. Sadly, a war, I suppose, helped those currencies to some extent. Anyway, down in the mid-single-digit appreciation against the U.S. dollar is the Singaporean dollar. People sometimes say, if I want to keep money in fiat, I want a safe haven currency, hey, do your own research. But for me, it's hard to beat the Singaporean dollar. And, those banks, some of the strongest in the world there. Having a bank account allows you to access Singapore government debt, different kinds of government debt more easily, such as savings bonds. If you're just a retail investor, there's things like that you can do. Yields are not going to be as high as dollars right now, but the currency has outpaced the dollar. And for me, neutrality is going to be the thing to have in the next 10 to 20 years. Singapore will be, obviously they are, in some regards, kind of a Western leading country. But I think that a more neutral place, even than Switzerland now, will not be the worst place to have money. And so again, could you open a Singapore bank account and hold Singapore dollars there? Sure. In some cases, you want one but not the other. In Singapore, you could do both, theoretically. The Canadian dollar somehow is strengthened a little bit against the US dollar. That's just a couple percentage points. Talked about how I've closed my Canadian bank account not long ago. Hong Kong dollar obviously trades within a very tight peg or a band with the US dollar. It is just ever so slightly down. And that is one where they've talked about the carry trade. When interest rates in the U.S. Were higher, and you essentially had this very narrow band that the Hong Kong dollar trades in, people were basically selling their Hong Kong dollars to buy U.S. dollars and get that extra 2% in interest. And the question was, I think they had to defend the peg, dozens of times. So the Hong Kong dollar essentially at par. The Chinese renminbi down a little bit. These are all kind of very minor, 1 or 2%. New Taiwan dollar, British pound sterling down 2 or 3%. Australian dollar has dropped. The euro has dropped in the last 5 years. So if we've talked about at times when the euro dropped more dramatically than 4, 5, 6%. That was an opportunity. Get your citizenship in Malta because it's priced in euros. Go and get your golden visa in Europe. Go and buy that property. Go and get that residence permit. It all becomes cheaper, especially when you look at the donation for a Malta citizenship. Europe in that upper six figures in euros. If you have a 5 to 10% drop in the euro against your currency, that's a substantial savings. And so I was telling you, about 18 months ago, I think, go out and take advantage of when the euro got down to par with the dollar. I said, this is a great opportunity to go out and get your backup plan in place at a discount. And so the euro is still down, but it's up, 8% since then. Danish kroner's down, New Zealand dollar's down, Polish zloty is down. I'm actually interested in some things that Poland's doing. I'm not totally bullish on Poland, but they're doing some things that I like. They have some good yielding stocks. They have some of the stronger banks in that region. Companies like Orlen provide a lot of the energy in that region. And that could be interesting kind of in an era when Russia's being pushed out. But the Polish zloty actually is coming back to the levels it would have been at about 5 years ago. So I think that if you find a different point in 2019, the Polish zloty is pretty close to where it was. If we do an exact 5-year calculation, I think it's not down as much as they say here. Swedish krona is down. Indian rupee is down. We're talking 15%. Now, look at the Indian stock market. Look at some of the stocks on there. You've seen incredible gains over the last 5 years. 100, 200, 300, 400% on some of those stocks. So, 15% loss, nominal terms, not the end of the world for the opportunities, in many cases, outperformed a lot of, U.S. stocks. And, what I like about emerging markets is sometimes, and I'm speaking kind of generally here, you invest in some emerging market bank that just goes crazy and it returned like almost NVIDIA level returns. For a casual investor, and I've said I'm an entrepreneur more than an investor. I have investments that makes me an investor. I look at this stuff. I'm not a total entrepreneur, but if I had to pick one, I'm an entrepreneur. I'm not perhaps quite as analytical about every detail as someone who is more of an investor. And so if you're in that category, then I think, are you going to figure out, is NVIDIA going to be the next thing, or is someone going to overtake them? I mean, that moves so quickly, that can be hard to keep up with, rather than, hey, set it and forget it. I think that the banks in Singapore are going to continue to be strong places. They're expanding into India. They're expanding into other places in Asia, fast-growing markets. I think they're going to do well. I'm just going to kind of set it and forget it for a while, versus having to check up on which tech stock is doing what now and what did Sam Altman say, whatever. You may be an investor and you may check that stuff every day. For people who don't, I like emerging markets because you can get greater growth without having to necessarily watch it every day. So one of the things that I like about having offshore brokerage accounts, bank accounts in other places, is my Indian portfolio. I keep checking. I'm paying a little bit more than a US listed ETF to have exposure to India. I don't know, 10 or 20 basis points more, I think I saw. India ETFs, I mean, the fees on those they're not nothing. I mean, it's not 8 basis points. I think I looked at one the other day, it was 80 or 85 basis points. I think I'm paying 1%. And I compared, I said, all right, if I just wanted to hold this Indian, basket of stocks in my own, in a brokerage account rather than through a bank account, and I'll save a few bucks. Would that be better? And none of the U.S. listed stuff outperformed what I have, because what I have invested in is I think a more locally managed fund. It's not just kind of a passive, mirror the index. It's we're looking for deals on the ground in India. We've talked about this for years. You can look at a U.S. listed or a European listed ETF or a UCITS, and you can say, oh, well, India hasn't done that well. Has it really been that much more, better than the S&P 500, for the volatility? Yeah, if you're investing offshore, generally it is. Now, the other reason that I don't think it really applies to India, I don't see a lot of Indian very good dividend paying stocks. I mean, just, you see like a bank where you'd see, in France or Georgia or any kind of a market. You think like Indian banks would pay dividends. They don't. The idea of having to have the investment offshore to control dividend tax exposure is not the issue. Because a U.S. listed ETF, in my case, running an offshore asset protection structure would be 30%. But that doesn't even apply. It's just that the returns on some of these locally managed funds are better. And so even with that currency depreciation, India remains one of my best performers. The one that has been more waffly has been Indonesia. And I don't see their currency on there. Not a great currency, but I think it's a country I believe in to some extent. Anyway, South Korean won. Interesting opportunity if you want developed Asia in your residence portfolio. They have a residence program. They've restricted it a little bit in the last year or so, I think. But good opportunity. I mean, we're seeing the won creep back up to pandemic levels against the US dollar. And so if you want that exposure to a developed Asian country. Let's say, okay, Singapore is you're probably priced out unless you really want to live there and run your company there, and then it's just it's more expensive, it's taxed, whatever. South Korea and the won's depreciation could be a good opportunity if you want the developed Asian base, potentially even citizenship, but very, very hard to get citizenship, and they don't, generally speaking, allow dual without, except for a few exceptions. That's interesting with the South Korean won. Norwegian kroner, there actually were some yield stocks I looked at, I think passed on there, but that's interesting. Japanese yen is down. Again, same thing. And people have said to Warren Buffett and to myself, oh yeah, you're doing well with Japanese stocks, but the currency is down just as much. Go back and look at some of the appreciation of companies again, I mean, like Indian levels, 300, 400% in some of these companies. I followed a little bit later Warren Buffett into one of the Soga Shoshas, the trading houses in Japan, Marubeni. I again don't take my investment advice for it. Do your own research. But I think Warren Buffett bought all four of some of the big Soga Shoshas. I said Marubeni seems like it has good international exposure. And I mean, in a matter of months, I think you're up 50% on that trade. If you go back a little bit further, I mean, you've doubled your money in that trade. Also got into Toyota, doubled money on that trade. So, 17, 18% in 5 years versus, if you're buying stocks in Japan when they were just totally beaten down a couple of years ago, you are still ahead. Yields are nominal there, so you're adding a few bucks in cash to that. And in Japan, it's not a country where you get any kind of immigration benefit. I mean, there's no citizenship. I mean, you wouldn't want it, by the way. They have a weird estate tax law for citizens and long-term residents. But, you can see as some of these countries just offer opportunities. Do I think Japan is going to be the place to be long-term? No, I think there's an opportunity. And for me, I looked at what are the companies that are very international, that are well-run. I got a couple of those. Stayed away from the rest. Anything that's purely domestic Japan wouldn't interest me. And perhaps you take profits on some of those eventually. But, there's some where you can, there's a short-term trading opportunity. There's some where there's a long-term hold opportunity. And there's some where by making an investment, it could be the conduit to some kind of residence or citizenship. Some of the worst performing currencies, the absolute worst is the South African rand among these major currencies. I'm sure there's something in there like the Uzbek som or something, or the Tajik whatever that's even worse. But Brazilian real is down. Brazil has a program we don't talk about as much for immigration. It does involve generally living there, but there's a path to citizenship, interesting citizenship to have, not a tax-friendly country. But there could be something there for someone who wants to diversify into a large economy. Generally speaking, the big Brazilian companies, they list on the New York Stock Exchange. So New, for example, some of the energy companies. So I don't know that people are generally buying stuff in the Brazilian stock exchange, but I mean, you have that consideration in there. So Mexican peso, a place we've talked about more recently. I'm bullish on Mexico. Again, you don't have to be bullish on a country to go and live there. That's just kind of incidental. The fact that you might choose to go and live there, or at least have a residence permit there, or if your parents are from there, claim your Mexican citizenship, whatever. That's in addition to the fact that I think there are economic opportunities, which, for me, if I can have a citizenship without changing my life too much, that gives me economic opportunities, or the potential for greater economic opportunities in a country, that's not a bad thing. I think having residences and ultimately citizenships in places that are on the upswing will be a good thing to do, if not for yourself, for your children. And that's one of the reasons why I think, besides having a plan B and a plan C for where you're going to go and what you're going to do in times of crisis, high taxes, pandemics, black swan events, what have you. Hey, if you can keep going, as I have, plan D, plan E, plan F, if nothing else, give your kids the opportunity to have citizenship in a place that could be a 10-bagger at some point in the future. The U.S. is losing its influence. You can say the U.S. dollar will always have some influence. I think there's some merit to that. I think it's also, I don't hear too many people in places where it's not to their advantage to saying that. Outside of the Western world, I don't hear that a lot. So that is kind of a product of the Western world, but there's some truth, sure. The U.S. dollar will remain somewhat relevant, but I think you're going to see more people shifting away from the U.S., shifting away from that. You saw it with Temu, as I mentioned, they're pulling out. If I'm a Chinese company, do I want to do business in the U.S.? And you could say, oh, good, be gone with you. Well, that's one of the growth places. I mean, the Chinese stock market's been coming back. We'll see how that goes going forward. But, you can't just say everyone you don't like should get out of your economy because your housing prices are too much or you don't like their geopolitics, and then expect for your economy to grow as fast as theirs will. And I think that, having neutral places in your portfolio that welcome investment from all is going to be good for places to live, places to have citizenship in, and places to hold their currency, and places to invest. And so for those reasons, places like Mexico intrigue me. Obviously, Switzerland for different reasons, Singapore for some of the same reasons as Switzerland, and even some of these that are down. I think that ultimately, if you found the right opportunities, you would be in a very good position.